Good afternoon, this is Bob Iacchino coming to you from the CME Group trading floor in Chicago. Talking base metals, a lot of movement, a little bit of sort of volatility in copper this morning specifically. Base metals moved earlier on the weakness in the Chinese economic data. Chinese PMI data missed both the manufacturing and the non-manufacturing. Manufacturing data came in at 52.3, was expected a tenth higher than that. Non-manufacturing held at 54, but was expected to tick up. But the biggest part of that probably was the new orders component, which could be a direct effect of the trade tariffs and the ongoing trade wars. Between the US and China, the new orders fell to 51.3, which was almost a full percentage point less than it was expected to come in. And that new orders piece still above the growth level of 50 in PMI. 50 is that level where above 50 means growth and below 50 means contraction. So still above 50, but it was the lowest of all the components of the Chinese PMI data. So that really weighed on copper specifically early and in the base metals in general. But later in the day, we heard positive headlines really on the trade tensions between the US and China. Those easing trade tensions brought a late bid into copper. So copper actually went from a low of 2.769 all the way up to 2.862. And that's a pretty big move for copper. The copper is positive as we come toward the end of the day of trading with a large wick on the bottom. If you look at candlestick charts, a lot of people consider that to be a slightly bullish signal. I wouldn't say that it is, but it certainly shows that late bid coming in off of those easing of trade tensions headlines that we got. And then lastly, in Chile, the Escondida mine, the strike potential seems to be growing. The Escondida mine is the largest mine in the largest copper mining country of Chile, and the union officials predict that BHP Billiton's offer to the workers will be soundly rejected. So the strike potential is going up. BHP still has the option of coming in with a second offer. They're not likely to do that. We saw a 44-day strike last year at the Escondida mine. These seem to be annual events now where BHP has to come in with a one-year contract to prevent a strike or prevent a long strike, sort of end a strike that's already started. So we're starting to see this, and copper is used to supply disruptions. This is a market that often has supply disruption based on stops. Even if this particular situation gets taken care of, there's a couple of other mines that are coming up with union conversations in the next few months. So we'll be watching that pretty closely. But today, copper ends up a little bit higher on the day. This is Bob Iacchino talking base metals, specifically copper, from the CME Group trading floor in Chicago.